Hello everyone, welcome to yet another session. Today we are going to be looking at grade 11 and 12 accounting fixed assets or tangible assets. By the end of this lesson, you should be able to calculate depreciation using the straight line method and the reducing balance method, the preparation of the disposal account, and the application of the 1 rand rule. Let's look into this question. 4.3 fixed assets. The information relates to the fixed assets of Tembeka Limited. The CEO is Lee Klu. The financial year ended on the 28th of February 2023. So my financial year is ending on the 28th of February 2023, meaning that the financial year started on the 1st of March 2022. Okay, what is it that we're expected to do? 4.31 bullet number 1, calculate the following: the cost price. So we are expected to calculate the cost price of vehicles on 1 March 2022. So we are expected to calculate the cost price of vehicles at the beginning of the year. Let's look at the information that the examiner has given us. Additional information A, it gives us the depreciation policy. Vehicles are depreciated at 20% per annum on the diminishing balance method or the reducing balance method, and computers are depreciated at 25% on cost or 25% using the straight line method. Then additional information B, we are given balances. Vehicles at cost at the end of the year, it's 930,000, and then vehicles at cost at the beginning of the year, we are not given that figure. That is the figure that we are expected to calculate. So this 2022, therefore it signifies the beginning of the year. So this 2022 is the 1st of March 2022, and this 2023 is the end of the financial year, which is on the 28th of February 2023. We are also given the accumulated depreciation at the beginning of the year. For vehicles, it's 275,000, and for computers, it's 262,500. Then additional information C, we are also given information as far as the trade-in is concerned. All right, let's go back to the question. We are expected to calculate the cost price of vehicles at the beginning of the year. What information do we have? We are given the cost price of vehicles at the end of the year, that is 930,000. We are given this 930,000 at the end of the year, and we are expected to calculate the cost price of the vehicles at the beginning of the year. So we have this 930,000. Let's gather all the information that we need. What else do we have? Additional information C. A vehicle was traded in for a new one on the 1st of June 2022, costing 260,000. We also need this information. So the business got a new vehicle on the 1st of June 2022 for 260,000. They let go of an old vehicle, which is given in the fixed asset register. So this vehicle was originally purchased on the 1st of March 2020 with a cost price of 180,000. So they let it go on the 1st of June 2022. So they got a new vehicle for 260,000. That is the information that we need. So where do we start from? Let's start answering the question. So we are not given the cost of vehicles at the beginning of the year. That is what the examiner wants us to calculate. So that becomes my X, my unknown. The cost of the vehicles at the beginning of the year, it's my X. Then what happened? Plus, what did we do? We are given additional information C, that we traded in for a new vehicle. We got a new vehicle. There we go. A new one on 1st of June 2022 for 260,000. So I'm going to add that. Plus 260,000. Remember, this is on the 1st of June. So we traded in. So we let go of an old vehicle. Which had initially costed us 180,000. There is the cost price. So we are letting go of this vehicle, which initially costed 180,000. There we go. So the cost price is 180,000 of the vehicle that we are letting go. So I am going to subtract that. So I'm going to say minus 180,000. This should give me my closing balance of 930,000. That is the calculation that I have to do to get the 3 marks. Then I solve for my x. What is my x? It's 930,000. Okay, this becomes a negative when it goes that other side, minus 260,000. This becomes a positive when it goes that other side. It becomes plus 180,000. Then I solve for my x and I get 850,000. So this is the cost of the vehicles at the beginning of the year. So the 850,000 is for the beginning of the year. So this is 850,000. 850,000. Okay, that is the first question. Then bullet number 2, it wants us to calculate a trade-in value. A trade-in value received on the vehicle that was disposed on the 1st of June 2022. So we traded in a vehicle on the 1st of June 2022. What does that mean? So the business on the 1st of June 2022, they went back to the dealership with a vehicle that they had initially purchased on the 1st of March 2020. This is additional information C. So they went back to the dealership and said, we would want to upgrade. We want a new vehicle. And then they exchanged the old vehicle for a new vehicle. So the trade-in value that the question is asking you how much value was given to the old vehicle that the business is letting go. What is the value, or what was the value that was agreed upon when this vehicle was traded in? Remember, this vehicle was initially bought on the 1st of March 2022, 1st of March 2020. Then it was used for almost 2.5 years. And then the vehicle had lost some value. So when we take it back, this vehicle has lost some value. But what is the value that the dealership is going to accept for this particular vehicle? We are also given a note at the bottom that the business made a profit of 5,560 upon its disposal. So they got 5,560 more than the intrinsic or more than the carrying value of this asset. So we want to look at that value, that how much was the trade-in value. Let's put this into perspective by doing a calculation. Where do I start from? The vehicle was initially purchased on the 1st of March 2020. Then we used it from the 1st of March 2020 to 28 February 2021. Then it lost a value of 36,000. There is the 36,000. Then we used it again from the 1st of March 2021 up to the 28th of February 2022. Then it lost a further 28,800. If you add these two numbers, it gives you this 64,800. Then we used it in the current financial year. Let's do a timeline. Then we used this vehicle in the new financial year. Let me draw my timeline here. So this is my timeline. Okay, this is my timeline. So my timeline starts on the 1st of March 2021. 2021. Is it 2021? 1st of March 2022. 2022. 1st of March 2022. All right, 1st of March 2022. That is the beginning of my financial year up to the 28th of February 2023. This is my financial year. And then we are told that this vehicle was traded in when? On the 1st of June 2022. That is when we let go of this old vehicle. All right, so how many months did we use this vehicle? We used it for the whole of March, the whole of April, and the whole of May. We are not going to include the month of June because this asset, we never used it in the month of June. We let it go on the 1st of June 2022. So we only use this asset for 3 out of the 12 months of the year. We call that pro rata. So we are going to calculate our depreciation based on pro rata. Only 3 months out of the 12. from the 1st of March 2022 up to the 1st of June 2022. Our calculation was going to be different if the asset was disposed on the 30th of June 2022. Then we would have included June because we would have used it for the whole month of June. But according to this question, we only used it until the 1st of June. So it's only 3 months. Remember, what method of calculating depreciation are we using? According to additional information A, we are using the reducing balance method. That means we are calculating 20% on the book value of the asset or the carrying value of the asset or the carrying amount of the asset. What does that mean? This vehicle was purchased for 180,000. So 180,000 becomes the book value of this asset. I'm going to put my 180,000 here. So 180,000 is the original cost of this asset. I cannot calculate 20% of 180,000 because that would be the straight line method. The additional information A says depreciation should be calculated at 20% using the reducing balance method. When you are calculating depreciation using the reducing balance method, you are going to calculate 20% on the book value of the asset. What does that mean? So you look at the you look at the cost of the asset at the beginning of the year, or rather the historical cost is 180,000. At the beginning of the current financial year, what was the accumulated depreciation? Remember, we bought this asset sometime in March of 2020. So we have been using it. So when we start the current financial year, how much value has this asset lost? That information is given on additional information C. We are told that on the 28th of February 2022, the vehicle had lost accumulated value of 64,800. It lost 36,000 on the 28th of February 2021. It went on to lose another 28,800 by 28 February 2022. So when we start the current financial year, the asset had lost 36,000 plus 28,800, which gives us 64,800. That becomes our accumulated depreciation at the beginning of the year, 64,800. Since I'm calculating depreciation on the book value, I need to calculate my book value at the beginning of the year. Then I take my calculator, I calculate the book value at the beginning of the year. So it's 180,000 minus 64,800. Then I get 115,200. Then I get 115,200. So this becomes our book value of the asset at the beginning of the year. Then we use this asset for a further 3 months. We use this asset for a further 3 months. That means it went on to lose more value. So since we are calculating our depreciation based on the book value, we are going to calculate depreciation on the 115,200. So I'm going to say 115,200 times 20%, which is the rate, times 3/12. Then how much do I get? It's 115,200 times 20% times 3/12. Then I get 5,760. So the business or the vehicle lost another 5,760 from the 1st of March 2022 up to the 1st of June 2022. So this 5,760, I'm going to put it here. Here. This is where it belongs, 5,760. So all in all, from the day that the asset was bought up to the day that the asset was sold, how much value did it lose? So I'm going to add 36,000 plus 28,800 plus 5,760, or you can simply say 64,800, which is the accumulated depreciation up to the 28th of February 2022. It's 64,800 plus 5,760. Then you get 64,800 plus 5,760. It gives me 70,560. It gives me 70,560. 560. That is the accumulated depreciation from the day that the asset was bought up to the day that the asset was sold. What is it that we are trying to do? We are trying to figure out that on the day that the asset was sold, what was its intrinsic value, what was its book value. So we are going to say, okay, this asset, we bought it for 180,000. We bought this asset for 180,000. We bought this asset for 180,000. So we bought this asset for 180,000. 180,000. Okay? Then we're going to say less what? How much value did it lose from the day it was purchased, that is 1st of March 2020, up to the day that it was disposed, that is the 1st of June 2022. It had lost a total value of 70,560. Then I say 70,560. Okay? Then I take my calculator. It's 180,000. 180,000. 180,000 minus 70,560. Then I get 109,440. This becomes my book value. This becomes my carrying value, or this becomes my carrying amount. Remember, the examiner is asking us the trade-in value. But if the question had asked us, calculate the book value on the 1st of June 2022, this would be my answer, that the asset, its intrinsic value is 109,440. But we want to find out how much the dealership was willing to give us for this particular vehicle that we are letting go for the new one. So then we are told on additional information C, the last item, that the business made a profit on disposal. The business made a profit on disposal of 5,560, meaning that the dealership was willing to give us an extra 5,560 over and above the intrinsic value of this asset. Then what do we do now? We take this 5,560, we add it to the book value of the asset. Then I'm going to say plus 5,560. How much do we get? How much do we get? So it's 109,440 plus 5,560. I get 115,000. 115,000. This becomes my answer for bullet number 2. So we traded in this vehicle for 115,000. In our next video, I will show you how to prepare the disposal account. We could actually have done this calculation using the disposal account. We are going to do a ledger account on how to prepare the disposal account. So watch out for the next video. All right, let's move on to question number 4.32. The bookkeeper calculated the depreciation of the computers as 300,000 times 25% is equal to 75,000. Explain to him why his method is incorrect and provide a calculation to support your explanation. Look into this question. The question is two-pronged. It's double-pronged. It wants you to explain. It wants you to explain why this method is incorrect. Explain. And then the second thing that the examiner wants you to do, is and. Okay? And what? And provide a calculation. Provide a calculation. Provide a calculation. And provide a calculation to support your explanation. So usually learners on such kind of questions, you see that sometimes they just explain, they don't do a calculation, they just answer, part of the question without necessarily looking into what is it that the examiner would want me to do fully. So be careful on questions like this. So for you to get the 4 marks, number 1, you explain why his method is incorrect and you also provide a calculation. So bear in mind that you do everything that the examiner has asked you to do to get all the marks. Now, so we are told that the bookkeeper calculated depreciation as 75,000, 300,000 times 25%. But from the look of things, it looks like he has done the correct thing because we are calculating depreciation using the straight line method according to additional information A. Additional information A tells us of how depreciation is to be calculated. So on computers, we are calculating 25% on cost. Is the 300,000 correct? Let's find out. Is the 300,000 correct? Yes, it is correct, because from the information we are told, we can see that the cost of the computers was 300,000. There was no addition, there was no disposal. Is it probably the rate? Maybe 25%, use 25%, 25. So it seems from a layman's point of view that everything is accurate, but the examiner is bringing it to attention that something is not right. What could be wrong? Now let's do a mini note 3. I'm going to rub everything. Let's do a mini note 3 to look at how this would have appeared in our note 3. Note 3 is tangible assets or fixed assets note number 3. Let's do a mini note 3 to see how this calculation would have looked like. Let's look at the calculation. How does note number 3 look like? How does note number 3 look like? You start with the cost at the beginning of the year. So it's the cost, historical cost at the beginning of the year. The beginning of the year is the 1st of March 2022. That is the beginning of the year. And the cost is 300,000. We are given it as 300,000. There we go, 300,000. We are given the cost of the computers as 300,000. Okay, there is my 300,000. Then what is my accumulated depreciation at the beginning of the year? What is my accumulated depreciation at the beginning of the year? We are given the accumulated depreciation at the beginning of the year as 64,800. 64,800. Oh, sorry, this is the wrong information. The accumulated depreciation on computers is 262,500. 262,500. There we go. This is the accumulated depreciation. We are looking at computers. So there it is. Accumulated depreciation on computers on the 1st of March 2022. 1st of March 22, it's 262,500. So it's 262,500 here. Come here, 262,500. 262,500. That is the accumulated depreciation. So what is my book value or my carrying value or my carrying amount at the beginning of the year? So I'm going to say 300,000, 300,000, 300,000 minus 262,500. It gives me 37,500. What does this figure mean? We bought these computers some time ago for a historical cost of 300,000. Then we've used them for a certain period of time until the beginning of the year, which is the 1st of March 2022, and it had lost 262,500. So at the beginning of the current financial year, the book value or the intrinsic value of these computers is 37,500. Now, we want to calculate depreciation now for the end of the year. For the end of the year, the bookkeeper calculated the depreciation of the computers as follows: 300,000 times 25%, and he got 75,000. Let's do what the bookkeeper did. Let's do what the bookkeeper did. Let's move on to the next step of the note 3. The next step would be your movements. Your movements. Movements, you are looking at what happened during the course of the year. So under movements, you've got your additions at cost. Additions at cost. Did we buy anything? Seemingly not, because we had 300,000 at the beginning of the year. We had 300,000 at the end of the year. So our additions at cost, there is nothing. Did we dispose anything? Disposals at book value? No, we did not. Then what happened? Then we look at our depreciation for the year. Our depreciation for the year, according to the figure that was calculated by the bookkeeper, it's 75,000. This is how our note 3 looks like. Now, let's look into this note 3. The intrinsic value of these computers at the beginning of the year is 37,500. And the bookkeeper calculated the depreciation and got 75,000. You can see that something is definitely wrong. What is wrong? There is no way that an asset with a value of 37,500 can lose a value of 75,000. This cannot be. I'm going to repeat that one more time. There's no way that an asset with a value of 37,500 go on to lose 75,000 in value. Where is the 75,000 coming from when the asset has an intrinsic value of 37,500? So there is no way. If we leave it like this, you are going to see that our asset or the computers are going to have a negative figure, a negative book value. An asset can never have a negative value. So in this case, this 75,000 is therefore incorrect. This is where you apply the 1 rand rule. So for the purposes of record keeping, our asset is therefore expected to have a net value of only 1 rand when depreciation is more than the book value. I'm going to repeat that one more time. In such a case where depreciation is more than the carrying value of the asset, we cannot record the 75,000. Otherwise, we are going to have a negative asset value. So in this case, we apply the 1 rand rule. We are saying the asset is, for the purposes of record keeping, it's supposed to have a value of 1 rand. So this becomes wrong. So what is therefore my depreciation supposed to be? So you take your book value, which is 37,500. You take your book value, which is 37,500. Your book value is 37,500. Okay? 37,500. So how much is the depreciation supposed to be so that this asset maintains a 1 rand value? Remember, it cannot have a negative value. So how much should be the depreciation be if the asset is to carry a book value of 1 rand? So I'm going to say minus 1. Then I get 37,499. This becomes the highest amount of depreciation I can record in my books so that I remain with a net value of only 1 rand. So before you calculate your depreciation, you make sure that your depreciation is not exceeding the carrying value of your asset. Every time you do your note 3, every time you are doing your income statement, make sure that the depreciation you've calculated does not exceed the book value of the asset. Like in this case, the depreciation was 75,000, but we cannot record 75,000 because it's over and above the carrying value of this particular asset. So my depreciation, therefore, cannot be 75,000, but it can only be 37,499. So it becomes 37,499. That becomes my depreciation. Okay? Now, we are going to finish off this note 3 so that you can have a picture of how the note 3 would have looked like if the examiner had asked you to prepare your fixed asset note 3. So my depreciation becomes 37,499. Now, we are done with the second part of our note 3. Let's look at the last part of our note 3. The last part of our note 3, we are looking at balances at the end of the year. So it becomes cost at the end of the year, which is the 28th of February 2023. The cost is historical cost. The historical cost is 300,000. Is this figure that you see here? It's 300,000 that you see here. So it's 300,000. 300,000. Okay. What is the accumulated depreciation at the end of the year? What is the accumulated depreciation at the end of the year? The accumulated depreciation at the end of the year will become 262,500, what we had at the beginning of the year, 262,500 plus the 37,499. It gives us 299,999. 299,999. So what is the book value of this asset at the end of the year? This is book value, or it can be carrying value, or it can be carrying amount at the end of the year. What is it? Only becomes 1 rand. So if we had put 75,000 here, it would mean that the book value at the end of the year would have been a negative, and we cannot record negative values for assets. So for this particular question, let's go back to the question. Explain to him why his method is incorrect. So this method is incorrect because the 75,000 would mean that the asset would have a negative value. The 75,000 is incorrect because it would mean that the asset would have a negative value at the end of the year. Provide a calculation to support your answer. So the calculation that we have provided is therefore 37,500 minus 1, which gives you 37,499. This becomes the value of our depreciation, not 75,000. That is what we would have done on question 4.3.2. Then the last part, the CEO, Lee Klu, wants to improve the company's image by donating the old computers to a local school in March 2023. He also plans to upgrade the software on these computers at an extra cost of 20,000. The shareholders feel that the old computers should be sold at a profit. Explain 2 possible points that the CEO can use to support his decision. So the CEO wants to donate these computers to a school. What 2 points can he provide to the shareholders to substantiate his decision that he has taken? Number 1, these donations are therefore tax deductible. That means they are going to pay less tax if they are to donate these computers. That could be a reason that we would have given. Number 2, this is going to enhance the image of the school since it forms part of the corporate social responsibility of the business. This is going to enhance their image since this is part of their corporate social responsibility. That brings us to the end of this question. Thank you for watching. Don't forget to like, to follow, and to subscribe to the page. Hoping to see you next time. I hope you benefited something. Bye for now.